If you run a business, there's one document you'll use time and time again: the invoice. But what exactly is an invoice? What information needs to go on it? And how do you create one? Let me show you. Hello there, I'm James and you're watching Accounting Stuff. In this video, I'm going to break down everything you need to know about invoices. To kick things off, what is an invoice? An invoice is a document that a seller sends to a customer to request payment for goods or services provided. It includes important details like who is requesting the payment, who needs to pay, what was sold, when the payment is due, how much is owed, and how the customer can pay. Essentially, it tells the customer, here's what I provided, here's how much you owe me, and here's how you can pay me. From an accounting point of view, an invoice also acts as a formal record of the transaction and helps track money owed by customers. But more on that later. When are invoices used? Invoices are used when a business sells goods or services and needs to request payment from a customer. Oftentimes, payment is due at a later date, which is what we call selling on credit or on account. For example, a plumber might complete a job and send the customer an invoice with payment terms of 14 days. Other times, this payment could be due immediately. Either way, the invoice serves the same purpose, to request payment from the customer. So what do you actually need to include on an invoice? While invoice formats can vary, most invoices include the same core information. First, you have the seller's details, which identify the business issuing the invoice. This usually includes the business name, address, and contact details. Maybe a logo too if you're feeling sophisticated. Next, you have the customer's information, which identifies the person or business being billed, followed by a few key invoice details such as the invoice number, which is a unique reference number used to identify the invoice, the invoice date, which is the date that the invoice was issued, along with the payment due date, the payment terms, for example, net 30, and possibly a purchase order number if you have one. After that, you'll see a description of the goods or services provided, along with the quantity, unit price, and line totals. If sales tax applies, the invoice may also show the tax rate and tax amount. At the bottom, you'll usually find the total amount due, which shows how much the customer owes. And finally, the payment instructions to explain how the customer can pay, which could be by bank transfer, credit card, check, or another payment method. How do you create an invoice? There are two main ways. You could use a spreadsheet template or accounting or invoicing software. It's probably easiest if I explain it with an example. You are now Pam Beasley, a freelance graphic designer, and you've just designed a logo for your very first client, Dunder Mifflin, for $500. Let's start by creating the invoice manually in Google Sheets. I'll be using one of the templates from my free invoice template pack, so if you like to follow along, you can download it using the link in the description below. It includes several professional looking templates, along with a checklist to help make sure that you've included everything your invoice needs. All you need to do is enter your business details, swap out the logo, add your customer's information, fill in the invoice number, invoice date, due date, and payment terms, describe the goods or services provided, add any applicable sales tax, check the total amount due, and include your payment instructions. Then save the invoice as a PDF and email it to your customer. You can also create invoices using accounting software. Popular options include QuickBooks Online, Xero, Sage, FreshBooks, and Zoho Invoice. If I've missed any good ones, do let me know down in the comments and I'll add links to them all in the description below. Let's say we use QuickBooks Online. We'd enter exactly the same information as before, and the software will generate a professional looking invoice for us. The advantages of doing it this way are that the software can email the invoices directly to your customers, accept online payments, send automatic payment reminders, and track which invoices have been sent, viewed, and paid. It also records the accounting entries for you and keeps track of outstanding customer balances. So if you send invoices regularly, accounting software can save you a lot of time. How do you send an invoice? Once you've created your invoice, the next step is to send it on to your customer. The most common method is to save the invoice as a PDF and attach it to an email. You might say something like, "Hey, Michael, I've attached invoice number DM1000 for the logo design work completed this week. The payment is due within 30 days. Please let me know if you have any questions, okay? Thanks, Pam." If you're using accounting software, you can usually skip the download part. You just hit send and email your invoices directly from the platform. Once the invoice has been sent, all you need to do is wait for the payment. Once the customer pays, you record the payment and mark the invoice as paid. It's also a nice touch to send them a quick confirmation receipt to let them know that everything is squared away. What are the different types of invoices? You'll probably run into a bit of jargon when people talk about invoicing. The most common one is the sales invoice. You might also hear it called a customer invoice. This is what a seller sends to a customer to request payment, and it's what we've been talking about throughout this video. On the flip side, the buyer usually calls that same document a bill or a purchase invoice. You might also hear it referred to as a supplier or a vendor invoice, depending on who you're talking to. A tax invoice is a sales or purchase invoice that includes sales tax details, and in many countries, the supplier's tax registration number. A pro forma invoice is like a quote dressed up as an invoice. It shows your customer the estimated costs before the work actually starts, but it's not a formal request for payment. And a receipt confirms that the payment has been received. It's the final confirmation that the money has landed and the invoice is settled. So how do invoices actually impact your books? Let's look back at our example. Imagine you've just wrapped up the logo design and sent the client an invoice for $500. There are two ways to account for this: the cash method and the accrual method. Under accrual accounting, revenue is recorded when it's earned. In this case, you'd record that revenue as soon as the work is finished, which is often around the same time you hit send on the invoice. You record a debit to accounts receivable for $500 and a credit to revenue for $500. This increases accounts receivable to show that the customer owes you money, and it increases revenue to reflect the income earned. When the customer pays you, you'd record a debit to cash for $500, along with a credit to accounts receivable for $500. This increases your cash balance and clears the amount owed by the customer. But in cash accounting, things are much simpler. You only record the revenue when the money actually hits your bank account. So you can basically ignore the invoice for now, since you won't officially record that revenue until the cash is safely in your hands. If you want to grab a copy of the free invoice template pack that I used in this video, just click the link in the description to download it. Or if you'd rather handle everything with accounting software, I've also dropped links to some of the most popular tools down there as well. And if you want to keep the momentum going with your accounting skills, why not click this video next to carry on learning? And I'll see you there.